Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today, we're going to be taking a look at the S&P 500, Magnificent 7 stocks, as well as any stocks of note that had earnings reports come out this week. So starting off with CNN, fear and greed. We are up into greed. We were down into fear not too long ago during the S&P 500 6% correction on pie vesting. You can see somewhat similar. We went down to neutral and have been going back up. Looking at crypto fear and greed, something to note is that we have not only created a higher low on the greed index, but a higher high as well. So it's possible crypto is reversing trends here in the short term. Also, let's look at smart money. I haven't showed this chart in a while, but I was interested to see where it's at. And you can see smart money maybe making some higher lows and getting back in, even though the market is kind of overcharged, and it's been overcharged since, not just 22, but late 2023. It'll be an interesting chart to keep an eye on. Here's the earnings report for this week. As you can see, there's Bitcoin mining stocks, which I do videos on every week, pretty much Wednesdays. So TeraWolf, Bitfarms, Hut, I think there is Iron or Iris Energy somewhere. Yeah, here it is. Probably a couple others, but some stocks that I think would be interesting to look at. Home Depot, Sony, Dole. That one, sometimes when I look at these earnings reports, I look for stocks that maybe I haven't even thought of, where I use their products and I just never really thought to look at the stock or the chart. So maybe we'll take a look at Dole and John Deere. That one tends to be a pretty good stock. And maybe even Under Armour. I wonder about Under Armour's long-term potential. Is it going to be around for a while and turn into, I'm not saying it's going to turn into Nike, but turn into a really quality clothing company for athletics? We'll see. Or is it going to be another starter brand like we had in the 90s? So it'll be interesting to look at those charts as well. Going over to the charts. So the S&P 500, I drew this fib a while ago from this high that we had here in July of 23 to the low in October. And just interesting to see that, when we go to the daily, you can see how the price action will bounce off these Fib marks, usually come down to a moving average. And then when it does break through, we get something like this. And the price action, when it did come down, it went down on the S&P to the 100 moving average and is going back up. So targets for the S&P right here on this Fib scale, you can take a look at it. The 2618 is at 54.22. The 3618 is at 59.27. And then we have 62.40 up there for the S&P 500. Going back, the reason I have this channel drawn, and you can look back at this. So when we created that low in the great financial crisis, all the highs have been touching the upper part of this channel. So after the COVID crash, even after all that stimulus money, this was the higher end of the channel, and we're above the 50% line. And what's interesting about the 50% line here in that channel, this dotted line, it's also where we touched near that 20 moving average and had a decent bounce. So, should we continue to be bullish? At best, I'd be looking at the upper part of this channel. Now I'll scroll down here a little bit more. Maybe we get somewhere like 64, 6,500, or 66 at best, but should a recession be coming, next year or whenever, we'll see. I'm going to show you one indicator I look at to watch for that. Then, maybe we go back down to these like mid-high 3,000 levels. We'll see. I don't want to get too caught up in the prediction game, but, really, that's why I have the moving averages on these lines, as well as I look at the percentages too, because when we are at the 200-week moving average or below it, those tend to be good value times to buy. And as well, if the stock market is ever falling more than 20%, those are good value times to buy too. 20, 30, 40%. You don't want to miss those opportunities. If we take a look at the VIX, which is a volatility index, We are at low volatility right now, and we haven't really been at these levels since, well, back here in December of last year and January 2020. Now, we all know what happened here, the whole COVID crash, and when the VIX does spike somewhere above the 30 range, those can tend to be good times to buy. As you can see right here, this is above 30, October 22. That's a great time to buy. So just something to watch for. The VIX, when you take the VIX, the volatility, and you divide it by the volatility of the VIX, you get a chart that looks like this. And one reason I like this chart is because I put on buy-sell signals and I take a look at a macro time frame, so weekly typically. But when it dips like this, those tend to be local bottoms in the market. So maybe we're going to come down for another dip. You can see here we have some sell signals. Maybe we can even move out to the monthly. But when we peak and when we get a big drive up, those tend to be great times to buy. So again, kind of like the VIX, but this can also, when you add on the buy and sell signals, can also tell you when there's possibly a big trend reversal coming. Going over to the unemployment rate, the trend is still up. During recessions, it can really spike, so just something to keep an eye out for. And one of the macro indicators to watch for is the yield curve inversion. And so when the Fed raises rates and holds them higher for longer, we typically get this yield curve inversion. That's a really simplified way of talking about it. When they do cut rates is typically when the yield curve will uninvert. And I want to keep this channel as simplified as possible, try to look at charts and values and areas to dollar cost average in for the long term, because a lot of investing and things with the stock market, you can get down a rabbit hole and make this as complicated as you want. You really can. And I do suggest you guys do that. If you are looking to invest in this stuff, do your research, of course, and research heavily into anything you might put your hard-earned money into. But really, here's the important thing to know with the yield curve inversion is that when it uninverts, typically again around the time they first start cutting rates from higher for longer, you can see here these dates, January of 2001 and June of 07, June, July. When it uninverts, that's typically when things in the market start to go down. And I can show you that right here on the charts. Let's put this on log. Now the red line, that's when the first rate cuts were after holding higher for longer. But look at the date at the bottom of the screen here. That was within a month of the uninversion. December of 2000, August, that was like a month after, and 07. And the bottom of the market was about a year and a half afterwards. We can measure that out just to show you. So the bottom right here is about, I'm just looking at the days. You can take a look at that. 22 bars, 669 days. So again, a year and a half, 2 years. And again, from here to here, the bottom was about 579 days. So again, a year and a half to 2 years. Now, does that mean that has to happen again? No. A lot of people are comparing what's going on with today and inflation to the 70s and 80s. Now, the white lines here that I put in, those were the peaks of inflation. And the last peak of inflation was decently close to the bottom in 2022. So if we get another inflation spike, that can kind of signal when we are at a local bottom. But you see here the white lines, inflation spikes near the bottoms, and look where the red lines are, those first rate cuts. Again, can signal the local top. This one they timed not too far off from the bottom. So doesn't mean that the uninversion is 100%. In the dot-com and financial crisis it was, but we want to consider both sides. If inflation is going to be a problem and how that's going to impact things, and we just kind of have to react to the conditions that are given to us. Bitcoin, something I want to note, and I do Bitcoin videos. Let's move in on the weekly here. On the weekly, after getting 5 red candles in a row, 5 weeks in a row, we finally have this long-legged doji weekly buy signal. So maybe things are getting ready to blast off into new all-time highs again. We had another 20-ish% correction on crypto, and we've had 5 of those now. So we had this one here, we had this here, this here, this here. Those were all 20-ish% corrections this year. I'll measure any one of these out for you I'll show you. See, there's around 20%. So, fifth time in a row we had a 20% correction, and we hit that 20 MA as well as this fib line here. I think it's on, maybe it's not on log. Let's make sure our fib is on log scale. It is not, so never mind what I just said about that fib. But zoom in way out here. Yeah, just got near that moving average. I have talked about, if Bitcoin was going to continue being bearish, right now it's made a higher low, a higher high, and has a daily close above the 50-day moving average. To me, that signals bullishness. We were staying within this channel, but I want to see this continue up above here. So got up to a little bit over 67,000. But if we did have a big bearish swing, I was watching this 200 moving average as well as this price action and this fib down here, to 50 to 53 range. But right now, that's bearish, kind of worst case scenario in the short term, bullish scenario. To me, this is looking bullish. Anyways, let's get into the Magnificent 7 stocks. NVIDIA, remember what I was telling you guys about the fib, how I dropped from the prior highs to lows. So I did this, and what's interesting is each time it would hit those next fib extensions here, the 1618, it would test it a few times, come down maybe to the 100 moving average, go up. Now the next fib, I think it's 2618, hit it, came down to the 20 moving average, came up, and we've tested the 3618. I believe that's, 3618 at 965. Came down to the 50, almost 100, but really settled in on that 50-day moving average, and it's getting back up near this 970 level. So the fibs aren't drawn perfectly, but here are some of the next levels to look for. So if NVIDIA gets above this 965 level, two areas to watch for, in my opinion, 1,000, a good psychological number, as well as 1,112. Or a little bit below that. So two price levels to keep an eye out for. So if you were lucky enough to get any NVIDIA down here, I do think you have to somewhat consider, taking profits here, just because the amount this has gone up in such a short time. If you were able to buy down here and you made something like a 600, maybe 700% profit pretty soon, within 2 years, guys, that's not normal. What's normal for these stocks is to go up something like, 30 to 50% a year, at best. So do keep that in mind. And, if you're looking at NVIDIA as, maybe a 10, 20-year play, and you're just going to, put into it dollar cost average in anytime it's at or below the 200 week, and you're like, you know what, I'm just going to keep riding this out. Hey, I get it. But the quicker and higher this goes up so violently, I think the more likely that, it could have a big swing down, even, should we get a recession sometime within the next year or two, what if it did have like a 50 to 80% downswing? That's just something to keep in mind. Things, when they get overbought, they can be oversold when things get bad too. Before moving on, let me just show a couple of things to look for as well. One is the RSI, the Relative Strength Index, and let's go to the weekly on this. And right now you can see this is overbought. Now the price went up, and the RSI is even or going up, so that's just straight bullish. Now watch where this peak goes. If this makes a solid peak but it's lower and the price is going higher, that is what's known as bearish divergence, and that price action could eventually be coming down or going to the downside later on. You can also take a look at, there's other indicators to look for. The pi cycle indicator is one, but let's do the bubble risk indicator. So you can see the bubble risk indicator is pretty high here around the 55 level. I've seen these get up into the 70s and 80s, but obviously the higher it is, as well as being overbought, the more likely we get a big pullback. So just some things to keep an eye on. I'm not buying these right now. I think NVIDIA is a great stock. This was the time to be buying it, but I haven't been buying it since these times just because it's been running so hot. So, I'll wait for good prices. Of course, you can just dollar cost average in. a set amount regardless, and then save or budget money to dollar cost average in, or DCA, in more when we have these big value times. So some people like to invest that way as well. Microsoft, kind of like what we were just showing with NVIDIA, seems to be, it came down here to the 20-week moving average. Let's add on our buy sell signal indicator and show this. So it's getting near this fib line, and that is around 434. So if it gets above that, next area 570 for Microsoft. This is the number one stock in the world, so do think about factors such as market cap. Right now it has a 3.12 trillion market cap, so if you wanted to take 570 divided by the current price, 419, whatever that ratio is, multiply that times this number, and that's what the market cap will be. I remember when people thought it was crazy that something would be valued over 1 trillion, and now here we are at 3. So, just keep in mind with inflation and the dollar losing, so much percentage of its purchasing power because the dollar is devalued. That way, the market cap can organically, in a way, inflate as well. So eventually, I would not be surprised to see this as a 5 trillion market cap as well. Apple, we were talking about Apple not too long ago, and I hope you guys remember us talking about how when Apple or Microsoft, when they're at or below the 100-week moving average, tends to be a good time to dollar cost average in. And man, people did not miss that. There's a buy signal, and by the time there's a buy signal, it was already too late. I mean, look at that. That was a huge move up. And, just something to think about here. Look at this move. It's over 10%, 12.5%, 13%, inside of 3 weeks. Now, take that percentage, multiply it times 2.9 trillion. 10% of 2.9 trillion is 290 billion inside of a month that this thing went up, or a little bit more than that number, but that's just crazy. Looking at Apple, hope some of you guys got in here, but you take a look at this. I do wonder, are we forming a head and shoulders, and then going back down somewhere like, I don't know, 150? We have the 200-week moving average. That could be. Or maybe we're just going to be going sideways for a while, chopping up and down between these levels, 170, 200, and accumulating. And you just got to get the next wave down at the 100-week or below it. So we'll see. We'll see. This is a very strong move, and we'll see if it continues momentum or if it's going to be like this and just round off again. And if it does do another wave down, watch out for a possible head and shoulders. But yeah, personally, I don't think that these 100-week moving average areas, I don't think people should be missing those if they like Apple. Amazon, we can see here, got above its all-time highs, but then came back down, and it's tested this 1, 2, 3, 4 times before. So Amazon looking to really break above the all-time highs, and the next fib level, the 1618, is at 255. So if it does, it starts moving violently upward, watch for that 255 level as area where people would be taking profits. Google, it is shooting way up past all-time highs. It is on its way up, and the next fib target, the 1618, 193. So watch what it does at 193. Like I showed you on NVIDIA, maybe it's going to smack into it, come down to the moving averages a little and just stay underneath it, or smack into it, come down to the 1020 MA, and then boom, shoot back up through it. So Google looking really strong right now. Meta, look at that. Meta on the weekly came down to the 20 weeks, been coming up, creating higher lows, and Meta has a weekly buy signal. So maybe Meta's even getting ready to go to the next fib level, and that would be 567 at the 1618. So area to watch for Meta. Last of the Magnificent 7 stocks, for me, I really think of it as a Magnificent 6. And sorry if I sound like a broken record here, but, I've talked about Tesla and how, look at this market cap of 564 billion. It's 10 times, sometimes it's things like 10 to 20 times the size of Ford or GM. And it is a car company. If you look at where all their profits come from, it's from them being a car company, not a tech company, even though it's treated like a tech company. But in a big recession, this stock is the one that worries me the most out of all the Mag 7 stocks. So its market cap is, let's just roughly say 10 times. I think Ford and GM are both around 50 billion. So it's over 10 times the market cap, and it has half the revenue of Ford or GM. So to me, that doesn't make a lot of sense. I know we can get more into the weeds and talk about stock flow. And if you look at the balance sheet, and I have with Tesla, it's a good looking balance sheet. And should we have a big recession, Tesla would be an electric car company that I would have faith in surviving because they have a lot of extra cash on hand. And, their revenues compared to liabilities is looking pretty good. So Tesla does have that going for it. My friends, they like their cars, but, chart-wise, I don't love it. As far as the research I've done. But again, that's my bias. If you like Tesla, something to consider is, how deep in value it is. Look at the last time it came down to this 100-month moving average. That's how far we're zooming out here. Tesla came down to the 100-month. Now, on the macro time frame, you can see we're creating these lower highs, but we have this higher low on the monthly, came down to the 100-month, and we're forming the strong wedge pattern. And I'm wondering if by later this year, ironically enough, that's around the time of the election, so insert whatever election narrative you want as to how it's going to affect the stocks up or down. But it's interesting, by that time, what's going to happen after? If, either person's elected, are we getting ready to just have a perfectly timed downturn in the market, and whoever's the next president that's just going to be what starts on their watch, and let all the pointing of the fingers and the blame game begin. But yeah, that's interesting to me. We'll see. Is Tesla, if it breaks either way, up or down, as this wedge keeps going, that'll be something to keep an eye on. So let's go back to the earnings reports. And the earnings reports, okay, I wanted to take a look at Under Armour, Deere, Dole, Home Depot, and Sony. So let's rip through those. If there's any stocks you want me to take a look at, let me know in the comments below. I also take a look at altcoins on Robinhood and Coinbase. So if there are other altcoins available on Coinbase you want me to take a look at, I will do that as well. So let's start off with Home Depot, HD. And here we are at the monthly. Look at that monthly sell signal. But let's zoom in here. Let's zoom in on the weekly. And what do we notice? Yes, we got that sell-off from the 786. I want to make sure this fib's on log. Let's make sure. All right, it's not on log. So that's going to change a little. Either way, got around the 786, came down to the 0.5. We have the 50-week moving average, and it's finding a nice strong bounce. But you can see here, no confirmation of a buy signal yet. So is it going to hit this 20 and then come down to the 100? Maybe. But possible time to DCA into Home Depot. You can see here had quite a bit of accumulation between the 100 and the 200 week moving average. Got above the 0.5, came up and back down. So, I am wondering, what is it going to do here? Is it going to just come back down, create another higher low on the 200 moving average? Look how well it honored that 200 week moving average. So, should Home Depot get to these areas, I think it'd be a strong area to dollar cost average in. But, if it gets a strong bounce from here and does turn into a buy signal, maybe we're going to be looking at testing those former all-time highs from back here in December of 21 around 420. So we'll see. Next, let's take a look at Sony. That was another one on that earnings report. And Sony, a little bit of a sell-off here on the weekly. And maybe it's going to come down to this fib at around 74. Let's zoom out to the monthly. My God, Sony looking a little weak here. We have the 100-month moving average coming up to the 236 fib around 74. So an area to watch out for should this downturn continue. And yeah, take a look at Sony here. I mean, here's one. If you would have been dollar cost averaging in on these longer time frames, look at this. This was the dot-com bubble. And it went up a little bit before the great financial crisis, and then went down even further. So imagine buying these monthly buy signals in these 200 MAs and, watching this go lower, from 30 to 20 to 10. That would have been brutal if you were a big believer in Sony. And guys, this is important to look at. So, I do talk about dollar cost averaging in and stronger areas to dollar cost average in. Do know no indicator, no technical analysis is a silver bullet for these things. There's nothing guaranteed to work out 100% of the time. And here's a prime example of that. We have great value, but all because we have great value and deep value doesn't mean it has to go higher. And, if you would have been even buying here, in order to see consistent long-term profit from that, you'd have to wait. Like, how long would you have to wait here? From 03 to 13 years, like a dozen years or so, that would have been brutal. So, another lesson in that, obviously do your research, make sure you're not buying the fallen knives, try to give yourself every advantage you can, whether it's buy signals or the moving average bounces. But yeah, do your research and really make sure you believe in what you're buying. So it's interesting with Sony. I do wonder, we have this lower high here and a higher low, so a little wedge pattern forming. Is Sony showing us possible cracks? If this continues to go down, is it showing us possible downside in the market as a whole? We'll see. I'm sure there's reasons for it being that low. So, of course, do your own research. Let's go back to this. And what else do we want to look at? Let's take a look at Dole, Deere, and Under Armour. Dole, Deere, and Under Armour. So with Dole, here's something that's surprising to me. Dole, it's one of those products that, or stocks, when I saw it on the earnings reports, I thought to myself, it's like, oh yeah, Dole has a stock. But when I looked at it, the surprising thing to me is, look at this IPO that's here in 2021. I would have thought, and comment below if more information on this. I'm sure a quick Google search would answer my questions. But, is there a reason this stock didn't IPO until 2021? Because Dole's been around forever. So that was curious to me. But again, I haven't researched Dole. I just know it's been around for a long time. So I'm surprised to see that the stock's only this new. But anyways, doing a fib from the height of the low, you can see here it came off the 0.5, and now it's above the 618 here at $12. So, I've talked about this, by the way, with altcoins and IPOs. Guys, in my crypto videos, I tell you, when new coins come out at or around or right after the all-time highs, I don't buy them. That's my rule. I rarely see them ever work out. And as well for IPOs. For the first year or two, I don't touch them. And you can take a look at this, when it IPO'd in July of 21, where is July of 22? All the way down here. And then I had another little bit down to go. So, around 50%-ish. 40-50% is how much it went down from the IPO. So just be careful with new altcoins and new IPOs. Next, let's take a look at Deere. We've taken a look at Deere in the past, and it looks like one of those strong stocks. And why wouldn't it be? I mean, this is just my thinking right here. Is farmers are going to be around forever, and they're going to be using good equipment like John Deere. And anyone I know who has a farm loves their John Deere equipment. Overall, really likes it. So, John Deere is one of those where I look at, if it's under the 100-week moving average, look at that. It tends to be a pretty good area to dollar cost average in. Here, sure, it got under the 200. Didn't pull a Sony quite, where it just freaking tanked. But look at how these 100-week moving averages just got bought up so violently. And here, 2016, things are looking pretty bearish back there. And look how long it went sideways for. Sorry, that's my cat's electronic feeder, if you hear that in the back. Yeah, it's ridiculous. But yeah, look at how long this can go sideways for. Here it's saying around 20 before shooting up to dang near 100, doing like a 5x here. Here, John Deere hanging around 80, before shooting up 2x to 160. hanging out sideways around 160, shooting up 3x, pretty much, right? Almost a 3x, 2 to 3x to the level we're at now. So we're going sideways, kind of like we have before. So, if you like your research on John Deere and you're able to catch it below the 100-week, I think that's looking pretty strong. Company's market cap's 110 billion, and yeah, they got great equipment. So that's just from my general knowledge. Obviously, do more research. Take a look at the balance sheet, make sure all of that looks good. One of the sites I use for looking at balance sheets, MarketWatch, and we can actually just do this really quick. If we just type in Deere and take a look at it, and you go down to financials. So other ways to look up balance sheets too, and then balance sheet. And we're just going to take a look at the assets compared to liabilities, okay? And they usually highlight it for you. Yeah, so sorry about that. Total current assets. So one thing that looks good, by the way, look at how the assets are going up year after year. Okay, that's good. 52 billion, all right? 52. And then the total current liabilities, 41 billion. Okay? Liabilities were staying sideways, then those went up a bit. So it's a ratio greater than 1. And the higher that ratio, the better. So John Deere, it is above that 1 number. That is a good thing. So just real quick look to see, is this a good looking balance sheet? That is one of the quick things you can take a look at right there. So yeah, obviously you can do as much research, get as much down the rabbit hole as you can, or as you want. Last, let's take a look at Under Armour, and oh boy, so I talked about this. Is Under Armour the next starter? I hope not. Currently valued at 666, so it's got Satan's number there. That's a good sign. But anyways, going over, make sure we're on the weekly here. My God, look at how much this thing sold off. There's really no point in drawing a fib yet. We could, and just go from the high that was right after the IPO. Imagine buying this at the IPO, and if you would have bought this at the IPO, just take a look at how much this has come down, like 80, 90%. So one argument positively you can make is, hey, this thing has deep value. And sure, yes, it has deep value. Is this company going to survive the next recession if we got one this year? Again, you could go to MarketWatch and take a look at that, take a look at the ratio, and let's do that. I'm too curious not to. And I'm curious what I would imagine. This is the first time I'm looking at this, I promise. I would imagine that it would be a ratio under 1, so that's a much bigger risk. So total current assets, 3 billion, okay? And it's been kind of holding sideways, went down a little bit. Total current liabilities, okay, 1.36 billion. I was wrong. That is over a factor of 2. Now, that's just looking on the surface. Obviously, do your own research here. But, let's actually take a look at this from, right here, you see the bearish perspective. This thing's way oversold. That sucks. All right, cool. Let's take a look at the bullish perspective. We have a ratio above 2 from the assets to liabilities. Okay, that's great. We have deep value in these higher lows. Okay, that's great. So, if Under Armour is a product you like, a product you use, you've done your research and you're feeling really strong about it, hell, why not dollar cost average in a little bit and take a little bit of a risk? You can't get great value from some of these investments without taking a little bit of risk time to time and having some skin in the game. Now, I am not saying Under Armour is a great investment. Again, it's got a market cap of $3 billion. If we compared it to something like Nike, I know totally different companies, nowhere near the same ballpark. Nike, 138 billion. I'm not saying, look at that. Look at how low Nike is. I'm sure we'll have to talk about that one too. I drew these trend lines a while ago, but even Nike is looking pretty low right now. So that's interesting. The apparel sector, is not looking so strong, and possibly time to get some good value dollar cost averaging in. So take your bets. If Under Armour is something you like, I'm not saying bet the farm on it. None of this financial advice, but if this is a product you like and you've done your research and you're feeling all systems go on it, is it worth throwing in a few $100 or a few thousand, depending, what your risk tolerance is, sure. But again, I'm just trying to be fair about this. We do have these lower highs, but we do have these higher lows. And, the fact that Under Armour had its greatest low here in October 22, and overall, my opinion, conditions of the market are better than it was here. It's maybe worth taking a stab at. But I ain't going to tell you what to do. You assume your own risks on any investments you take. And this is without doing any research and looking into, why is Under Armour and Nike down so low? What is going on there? And, if the reasons look a little bit overblown, then hey, maybe this is some deep value time to get some Under Armour, and heck, even just getting back up to these levels, that'd be like a 3x right here if Under Armour got back up there. So just something to think about. Everything's a risk, of course, and as we go down in these lower market cap stocks, the greater the risk is. So obviously, take your own risks, and really believe in what you're putting your hard-earned money into. And the more risk, sometimes it feels enticing because it's like, I know the thought like, wow, I could multiply my money that much quicker than I would with Google or Amazon or whatever. But your money's way, for how much quicker it could multiply, it's even more unsure of an investment. So anyways, guys, I hope you enjoyed the video, and I hope you're having a great Friday. If there are any stocks, altcoins on Coinbase you want me to take a look at, let me know. Have a great weekend, everyone. Thank you for watching. Take care.